Good morning this Wednesday, the 11th of October. I'm Grady Wolf, market analyst with Belter Ranked. Over in the US on Tuesday, a sharp decline in Treasury yields boosted equities on Wall Street to extend this week's rally into Tuesday as investors assess the geopolitical and long-term risks of the war in Israel. The Dow Jones rose 0.4%, the S&P 500 added 0.6%, and the Nasdaq rose 0.7%. Easing oil prices on Tuesday also boosted investor sentiment after the price of the commodity rose 5% on Monday on concerns of the long-term effect of the war in Israel. Investors in the US are also looking ahead with optimism at the release of third quarter results out later this week. In Europe on Tuesday, markets reversed Monday's losses to close higher across the region despite rising tensions in the Middle East. The Stoxx 600 rose 2%, boosted by travel stocks rising 3.9%, despite the global uncertainty around travel as airlines cancel flights to Israel, while mining stocks rose 2.9% on Tuesday. Germany's DAX added 1.95% on Tuesday, the French CAC rose 2.01%, and in the UK, the FTSE 100 lifted 1.82%. The rally on the ASX extended into a third straight session on Tuesday, with the ASX 200 gaining 1.01% to close above 7,000 points again at the closing bell, driven by the utilities sector jumping 4.17%, followed by technology stocks climbing just over 3%. All 11 sectors closed Tuesday's session in the green yesterday. The local rally followed a positive night in the US on Monday night after some Fed officials suggested the recent surge in long-term Treasury yields may reduce the need for the Fed to raise its benchmark interest rate again. Rate-sensitive sectors in Australia were the best performers on Tuesday, including tech and REIT stocks. Origin Energy did most of the heavy lifting in the utility sector on Tuesday, closing the session up 5.5% after Australia's competition watchdog, the ACCC, approved Brookfield's and EIG Partners' $18.7 billion takeover offer for the leading energy wholesaler. Weebit Nano, a semiconductor company based in Israel, rallied 6% yesterday after confirming its Israel-based operations had been unaffected by the Hamas-led attacks on the region over the weekend. Lithium miners were also among the session's winners yesterday, with Core Lithium adding 7.3% after being upgraded to a neutral rating by Citi, while Pilbara Minerals jumped 6.17% after also being upgraded to a buy rating by Citi. The local market rally yesterday was also boosted by Westpac consumer confidence data, showing a rise of 2.9% for October, which well exceeded economists' expectations of a 0.7% decline. And NAB business confidence data for September, also released yesterday, showed a reading of 1 point, which was the third straight month of a steady reading and above the -2 points expected by markets. On the building crisis front, building permits data from the month of August, released yesterday, came in at a 7% rise month on month, which is a strong rebound from the 7.4% decline in July, but building permits year on year still fell 22.9%. Private house approvals month on month, though, rose 5.8% from a 0.4% rise in August, which shows a slight recovery in the housing sector. On the commodities front this morning, oil is trading 0.6% lower at $85.84 a barrel. Gold is down just 0.06% at $1,859 an ounce, and iron ore is flat at $119.50 a tonne. One Aussie dollar is buying 64 US cents, 95.45 Japanese yen, 52 British pence, and 1 New Zealand dollar and 6 cents. Ahead of the local trading session here in Australia, the SPI futures are suggesting the ASX will extend its green run into a fourth straight session by opening the midweek session up 0.49%. And now let's dive into some trading ideas for your consideration today. Bell Potter has decreased the 12-month price target on Paradigm Biopharmaceuticals from $2.20 to $1.40 and maintain a speculative buy rating on the Australian-based biotech company following the company releasing a report on the 12-month efficacy data from Para-008 yesterday as a study. The study continued to show patients on the highest dose continued to show significant reductions in pain, along with improvements in function reaction 12 months after dosing. Despite the promising outlook and study results, the stock has been sold off as the sector remains out of favour with investors. Hence the downgrade to the price target, reflecting an increased discount rate in the DCF model and earnings adjustments to FY24 and FY25. And Trading Central has identified a bullish signal on Samphire Resources following the formation of a pattern over a period of 17 days, which is roughly the same amount of time the share price may rise from the close of $6.25 to the range of $6.75 to $6.90, according to standard principles of technical analysis. And that's all we have time for this Wednesday. Have a wonderful day, and as always, happy investing.